Alright, so this is part two of the VIX and TPO video. I'm just going to continue from where we left off. We had went over what the VIX is, what you guys should be looking from the VIX, to determine whether you should be bullish, bearish, depending on what the VIX does, what price we're ranging at, and then the TPO profile, what it means, type, time price opportunity with our low traded zones and high traded zones. So this video I'm going to show you guys how I like to mark out these TPOs to match them up with the VIX, whether we are dumping on the VIX or um, rising on the VIX. So with that being said, right now you can see that we are in an obvious downtrend on the VIX, coming back down into bullish territory within the 18s, 17s, right? So ideally, you should be looking for longs up until we bounce off of a TPO range, right? And that's why we mark them out, is because if we do end up bouncing from these low traded zones, we could then flip our position from or bias from bullish to bearish, and then target higher TPOs or past TPOs that previously already got hit. So for now, I'm going to zoom out here, and you can see, right, like I had went over in our last video, these are the low traded zones. Every time we indent on the TPO, here, 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 and then these are when we're in high traded zones, is when we don't indent and we have more areas that we're blue in. And this is how I mark them out. You can see that every indent has a deep point to it. So here, right, this is our deep point for this TPO. This is our deep point. This is our deep point here, 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 and here. And how I like to mark them out is I like to only mark out the deepest point up until when we start to curl up. What that means is, so since we are pretty bearish on the VIX, which means we need the VIX to keep dumping to target lower TPO profiles. So then we can continue targeting higher and higher on the index. We just need to mark out these TPOs, right? So for example, this one hasn't got hit yet, so we need to mark this one out. This is just a simple indent, right? There's really nothing else. It's just this plain box right here. So I just mark out the bottom from the top of it with the square like this. So then when the VIX does enter this area, I know that this is our mark TPO that I have, and I'm expecting either the VIX to reject and come out of this or continue lower and play into this single print TPO that we have sitting at 16s. But ideally, this is pretty low on the VIX, so we should get a bounce here at this area. If not, we will get a bounce down here. This is usually where we bounce at. A lot of the times is very low 16s. And then we maintain our average range is usually 16, 17, 18s. This is usually like our range because we're usually bullish on the market. So with that being said, that's how I would mark out this one. As for these TPOs right here that the VIX is chilling at, I like to mark it out, like I said, the deepest indent up until when it continues. So right here, I would just mark out this box right here up until when it starts to curl up. So that's here, and then it starts to curl up with this box. So I mark out this whole thing right here. This whole thing would get marked out. And then this is how I would do it. So from here to the deepest point, draw it out here, and you can see when the VIX had entered our TPO here, we had bounced out, testing resistance. And in order to know if we're going to stop dumping, we just need to break above support or keep um, breaking these TPOs going up and up and up. And then this is how I would mark out this one, right? Deepest point up until when we start to curl up. So that would be right here. Mark it out like this, and that's it. And this would be our three TPOs. These were going to be our three TPOs that are as close as they can be to the VIX, so we can use them for our directional bias intraday or even for the week. As for the ones higher, you can mark them out. Like for example, this one, like this indent is kind of big. Like this is from $18.82 all the way to $19.30. So this is like almost a whole dollar range. So in cases like this, I won't mark this to this. I'll just mark out the main big box that we have, and it'll just look like that, right? And then this what this one would look like. I'm just gonna flow through it so you guys can get an idea of how I just marked them out really quick. And then like that. these will be the marked TPOs on everything. And you can see wherever the pink starts, this would be the main indent on that low traded zone, right? Um, Besides marking it out like this, there are days where you might not be sure whether you should mark out a TPO or not. For example, right, when we had this pump all the way to $28, there really wasn't much TPO to mark out. Like for example, like this all the way to here, like this is like a whole dollar range, so you wouldn't mark this out unless you're loading up more days. So like for example, if I just go to the 30 day, right? The TPOs that I had just marked out look completely different now because now it's loading up 30 days worth of data from the TPO and you can get main points, right? So this one, these two TPOs that I had marked out on the 10 day, when I switch to the 30 day, it's just one big indent. So you don't really want to mark out the whole indent that's created on the TPO because then you don't really know where the VIX is going to have an initial bounce or rejection at. So that's why you need to scale from 30 day and just load up less days so then you can get that real intraday TPO target for the VIX. But in days like that, it's hard to tell from just the 10 day. Then you would scale up to 30 day and load up some more data. But in this case right here, the 30 day is just not going to do us justice. We kind of need that intraday um, indent. So that's why I just go back to the 10 day, right? Now the TPO looks better, right? These are the main points that we want to look at for intraday. And then if we do decide to go lower, then we can scale, right? Then we can go to 30 day and then load up some more days, right? See, now the TPO is created more down here, right? So if we do decide to come all the way down here, we have TPOs we can mark out because we loaded up more days. And that's how you guys want to be doing this with the TPO. In terms of doing analysis from this, I would simply just combine your concepts that you're already using. So whether you are trading ICT, supply and demand, um, what I trade, fractal, order flow, use your confluences that you're already using for your bias and pair it up with the VIX or even pair it up with the TPO because this is going to give you an extra boost that you are correct about your bias, right? So like if you went through all your analysis from the model that you use and everything's coming out bullish and you have these marked out TPOs from the VIX and the VIX is dumping, then you should be good to carry your bias because the VIX is low, we're dumping, and you have marked out TPOs to target if we do dump lower, right? So that's how you guys want to be using it and pair with your model.